Hi everyone, welcome to the webinar. We're glad to have you. We're actually gonna wait a few minutes for a few more people to join the webinar, and we'll begin here in maybe 2 or 3 minutes. So hang tight. If you guys have any questions, please feel free to submit them in the questions box, and we'll get started here soon. All right, guys, so it's 1:03, so let's go ahead and get started. Again, welcome everyone to our webinar. Don't get hit by the bus. Just before we move on, I have a couple of housekeeping items for you. This webinar is for 1 CPE credit. However, you must stay engaged for 50 minutes out of the hour, and you have to answer all 4 polling questions in order to receive CPE credit. I will prompt you with a CPE question. You have to click and answer in the time allotted, which is generally about 30 seconds, and it'll gather the data and we'll send you a CPE certificate as soon as we can after the webinar. If you don't receive a CPE credit certificate within maybe a week or 2, feel free to shoot us an email and we'll make sure you get one. A couple of GoToWebinar reminders. There is a questions box in your GoToWebinar tool, and you can submit questions throughout the presentation. We will try to answer them as soon as we can. If it's an easy question, I'll answer it for you. And if it's something that deserves a follow-up after the webinar, we'll send you an email and answer your question. If there is time at the end, maybe we can get to some of those questions, so please don't hesitate to ask us anything and everything. I know our guest Tim is open to that as well. Okay, so our agenda for today, we're going to talk about automation and controls with DexYP. So we're going to go through some brief introductions. I'm going to introduce SOFTRAX and the Revenue Manager application. And then I'm going to introduce our guest, Tim Ryder, and DexYP. And we're going to go through the revenue recognition bus. So complex revenue recognition at new levels. Why automation was the only option for DexYP, as well as the SOFTRAX solution, and sort of how Revenue Manager really helped them out. So a little bit about SOFTRAX. We are based in Boston, Massachusetts, and we are a division of AFS Technologies. We have offices across the globe, and we've pioneered automation for complex revenue recognition since the 1990s. We have over 800 deployments and 0 failures. And this actually says that we are on our 4th generation architecture, but we have a 5th generation coming out so soon. So please be on the lookout for that. We would love to show it to you if you want a demo. And it's specifically designed to handle complex revenue recognition. So my name is Kristen Lawson. I'm a CPA in Massachusetts, and I'm the sales engineer here in the Boston office for SOFTRAX. My background is actually in Deloitte, at Deloitte in consulting and accounting. And I'm joined today by Tim Ryder. Now, something that he wanted me to share with you all was that he is a Taurus and he's an accounting nerd, finance and accounting. He works in special projects and development engineering. So a little bit about Dex. Dex is the leading provider of local marketing solutions to approximately 600,000 business clients across the United States. The company's approximately 2,800 sales employees work directly with clients to provide multiple local marketing solutions to help clients connect with their customers. In 2017, they acquired Yellow Pages, so they became DexYP. Also in 2017, they published approximately 2,000 distinct directory titles in 48 states and distributed approximately 116 million directories to businesses and residents in the United States. Pretty impressive. So Tim, thank you for joining us today. Do you have anything to add about yourself or about Dex before we move on to our first polling question?
Yes, from my side, I work with the accountants. I'm somewhat of an accountant, mostly of a consulting for them. And a lot of times I'm developing systems, whether it's a multi-element system or a tax system. I've done refund systems. I work in the billing groups, everything from big systems like Salesforce and Oracle Financials to Amdocs to PeopleSoft, Oracle BRM. I've done a lot of different things, developing systems for many different groups. So happy to be here.
Awesome. Yeah, we're glad to have you. So if you have any systems questions for Tim, please feel free to submit them. He has a lot of experience. Okay, so we are going to start with a polling question really quick. So again, remember you have to answer all 4 polling questions to be considered for CPE credit. All right, so the first polling question, which of the following best describes your company's status to meet the requirements of ASC 606? Not started, in implementation, in the first phases, or adoption fully complete. We'll give you some time to answer that, and then we will close it, and we'll gather those results. I'm going to give you about 10 more seconds. All right, a couple more seconds. It looks like we've gotten a lot of answers here. All right, close, and let's see those results. Okay, so we have almost 50% in adoption fully complete. That's awesome, guys. Okay, so Tim, can you tell us a little bit about what Dex did for their implementation? Did you guys go through a formal assessment or a process? What did that look like for you guys?
Yes, we started out hiring some consultants, 2 different groups. I think it was PwC and Horath, and they came in, and the first thing that we looked at and that we wanted to examine was our contracts. It was very important to say, what are our contracts and how does that tie to a 606 methodology? The next part that we would look at our performance obligations, our products that we have, and how do they function within a performance obligation. Do some be immediate as a product or other services that fulfill over time? The next part that we look at is price. How do we come up with our price? We have different structures here depending on market tiers. We also have discount programs that we offer, and we also offer things that we call a hard bundle, where it's a set price for multiple performance obligations. Then we take a look at all of this to figure out how do we need to recognize this going forward for the future. After all of that, then we would go back and look at each system that we have. And we have multiple billing systems over here, sales systems as well, to try and find a way to engineer our side to meet the needs of SOFTRAX. Because on the SOFTRAX side, it is, I need a certain set of information for each performance obligation, whether that's price, time of frame for revenue transactions. I also need a fair market value, as they call it, a standalone selling price, and develop applications around our side, that we can consolidate all the information, which can then be sent over through an API calls to SOFTRAX to load and then process the data. So it's been a long process.
To say the least.
As we acquire companies, as we've done with YP, we had to take another look at things. We've also tried to implement new billing systems as well. We just finished up a Recurly system that we're trying to integrate. And so from our side, it's a fluid process. And so we continually look back at what we were designing to make sure that it still fits future needs. And what I mean future needs is not just now, not just this year. How do we engineer all of this so it lasts 10 years? We don't have to come back and reevaluate things necessarily and to go through a whole new build process. That we take care of it the first time, we do it right so it can grow or shrink depending on if systems come up or systems go down. But then we keep the communication links standard as they are with SOFTRAX. So we don't have a lot of changes, hopefully, on the SOFTRAX side. We keep it all internal, and that's one of the big benefits to us.
Yeah, wow. So that sounds like quite a process, but I do love that you're kind of evaluating as an evolution, sort of that fluid process. So it sounds like you're not actually fully, completely implemented and done, but maybe you never will be because things are constantly changing around you.
Correct.
Yeah.
We in the future, we may be expanding new horizons. I mean, there's always opportunities out there to grow your business. And the idea of SOFTRAX is to say, we can change on our end, but there is a support team out here with SOFTRAX that can handle our change. That was a very big key for us.
Yeah. Well, thank you for the sales pitch. That was perfect. But that's also exactly the steps. I love that you went through the 5-step process, and we'll actually walk through that here soon to really determine what you guys needed. And then you plugged in solutions and you made it work all the way from your revenue management practices to the business implications. And well, again, we'll walk through that today, but sounds like quite a process you went through.
We are still going through it.
Still going through it, that's right.
Yes,
okay,
it's an evolution.
Yeah, let me hide this polling question for you guys, and let's open up to our first topic. All right, my slideshow is not moving here. Hold on, guys. There we go. Okay, so the first topic we're going to talk about is the revenue recognition freight train, and the bus. And it's complex revenue recognition at great scale, because we're going to talk about DEX and their complexities. And this is really the meat of the presentation. We're going to compare the past and the present and discuss kind of the accounting guidance as well as the systems and solutions side of handling these requirements, particular to DEX's requirements. All right. So just a little, brief review of ASC 606. The guidance, the core principle of the guidance is that an entity should recognize revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange for those goods or services. To achieve that core principle, an entity should apply the following steps. And this kind of outlines pretty much what, Tim, you already went through in terms of deciding how you're going to manage this entire process. So you identify the contract, identify the performance obligations in the contract, determine the transaction price, allocate the transaction price, and recognize the revenue. And in terms of complexities, I mean, even coming down just for everyone and not necessarily DEX, identifying those performance obligations. Are there bundles? Are there carves that you have to do? Are there performance obligations with multiple elements inside of them? Maybe you have to unbundle those. And then what are the system implications of that? Are they one line item in your upstream system? Are they multiple? Are you going to have to carve those out? Determining the transaction price and allocating. So how are you going to maintain those standalone selling prices? And then recognizing revenue. So maybe even a timeline consideration. Are these going to be short-term contracts that you're recognizing? Are they long-term? are there both pieces within the same contract? You know, do you have something with a revenue recognition time frame of 1 period and then you have something with 12? How are you going to handle that? So that even comes down to the systems, as well as fulfillment events. So do you have additional conditions on those revenue items or performance obligations that really, you know, are an obstacle for recognizing revenue? So the next thing we're going to run through is the revenue management side of DexYP. We're going to talk about those compliance and system integration discussions. So first up, for ASC 606 compliance, you know, they're handling contract obligations, defining performance obligations, bundling products, carving out products. They have to handle allocation and SSP maintenance, contract modifications, and then from a systems and integration perspective, they're handling those fulfillment events. So they have a little bit of everything that we just talked about on that last slide. So Tim, can you tell us what was the most difficult to implement?
I think for us, initially, it's been, what is a contract? Okay, because we don't, the concept over here at DexYP is the customer is fluid. So they may buy 5 items today, 2 items tomorrow during their window of time with a sales rep. They may change their mind here and there. And so we went through an extensive analysis to determine what is the standard time period for a customer and what a contract is. And we discovered through looking at a few years worth of data on our side that it was not really a contract obligation, a contract signature, a purchase order, or whatever you want to call it. It was a time window, actually. And we found that on our side it was 40 days. And so we worked with our auditors to go through this process to show them our methodologies to say, if something happens within this 40-day window, it is automatically part of said contract, versus, well, they signed something today and that is the contract, and they signed something tomorrow, that's a new contract, and just compare the two. We realized that that really wasn't the case of our company, that we had to go somewhere else with this concept of contract. And so that was one of the big difficulty areas of our process. The second one is the fact that we have multiple contract systems. We don't just have one. We have our core Salesforce system that handles 90% of our customers. But then we have other systems out here that run through national or reseller companies or other type of things, and they have their contracts, and all of these things come together to create one contract for a customer. So a customer may have gone multiple places to fulfill their order. Well, that's unfortunate. That's just the case of how it is right now. So we looked at everything and said, well, if we have all these multiple contract systems, how do we integrate them together, and can we integrate them together? And we went through analysis to quantify materiality, if you will, to determine shifts of that 606 and 605 at the time can create because of our timing issues. And so we didn't necessarily bring in every contract system. We're looking at core ones right now. But everyone seemed to be, as we like to use the word, technically infeasible. That we will spend an exorbitant amount of thousands of hours building something for something that is an immaterial dollar amount. And that's been one of our new challenges as we go forward.
Yeah, it sounds like systems is a big deal for you guys. Having to handle all the upstream and the talking and defining contracts and handling the contracts, and that is a lot.
Yes, we do not have a core ERP system or a CRM system. We just, because we've acquired other companies or come up with new products over the years, we just have an amalgamation of different systems, and unfortunately they aren't used to talking to each other. So we use a web a TIBCO Web Services group to have these systems talk to each other.
Yeah, that's interesting. I mean, I think a lot of the people, that we've talked to, a lot of them have backbone ERP systems, but some of them have been frustrated with their lack of flexibility. I mean, in your experience, is it better than to have multiple systems, or is it better to have one solid ERP system that handles everything?
Well, I think for something like that, a lot of groups would say sometimes it comes down to money. I mean, just very simply that, an ERP system is well-rounded, but that doesn't mean it's always the best at one area. Okay, it may be good in everything, but some areas may be lacking as far as the best of the best. And so from the standpoint here, it's trying to look at other companies and say, well, they may have a billing system over here that is perfect for subscriptions. And we do have a subscription-based side over here, and so we chose that instead of looking at a standard ERP package that Amdocs would have. So in that sense, it's what suits your company needs. Another problem with ERP ideas is it is relatively out of the box. So if you have something very specialized in your company, if you have two choices. You either can spend money to have them configure something and customize it personally for your company, or by the same token, you can change your company to fit their package. That in itself can be a cultural shift that some people just don't want to do.
Yeah.
So here we kind of, we try and look for different packages at times to say we were looking for something better. The flip side con of that is these systems don't always talk to each other.
Right. So there is really no one size fits all solution. You kind of have to figure out what's going to be best for the right circumstance and the right company and the right situation.
Correct.
Yeah. Well, that makes sense. Okay, so let's move on then to kind of go over the customer-centric view. So a lot of your, analytics and reporting come from the fact that you have a customer-centric model. So here I've listed out some stats. You have 500,000 plus customers, 750,000 customer items every month, 600,000 in pre-contract. Contracts are 1.3 to 1.5 million records. And that it all comes out to 7.5 million transactions a month, which is outrageous if you think about it from a volume and scale perspective. And then if you think about it from the systems perspective, which is what we were just talking about, it's my understanding that you guys started with homegrown systems and you guys had built out some solutions yourself. So can you tell me sort of what you guys were doing before and how you guys are handling then this customer-centric model now?
Yeah, for the 605 version, I built an allocation system going across our core billing systems that also house contract data, and so there's two different ones out there, and they are not based off of your standard change management view of a contract like SOFTRAX is, and majority of revenue systems for allocation done actually a lot differently, where I look at a period over period change. This was designed, it's a faster build at the end of the day. It's easier to understand from an audit perspective and from an accountant perspective. The flaw with it, though, is it doesn't work real well with a 606 model. Okay, period over period comparisons. And so when we come to this new age with the customers that we have, it was, well, we could look to build another one, but then, as I would tell management, something of this nature is highly complex. And so when we consider the future, this new world that we have in for 606, building something that is a little bit more complex, given the fact that there's less accountants nowadays, it seems, at least my personal opinion, that are not studying as much systems. It's a lot of life to give up. I understand that. There's enough to do in accountancy just on its own. And so this comes to the idea of, if you build your own, you really have to worry about that bus theory, getting hit by a bus. That's how I look at things. Because if you do that, and something bad happens, you're kind of in trouble. Who supports it now? Who understands it? That type of knowledge needs to be disseminated as much as possible. And we started realizing that with our current multi-element allocation systems, that there wasn't enough people who were really getting to understand it. And so it took a step back from that. I did and said, I don't think we should build one in the future. I think we should go look outside so the accountants have the support team that they need going forward. Given our size of our customers and everything else that we have, you know, the idea of a cloud system, there's some intrigue around it, I have to admit. Level of transactions that we have, it's high. It could get higher. It may go down. It just depends on our modeling of how we do some things at the end of the day. Again, it's an evolution. I do expect the $7.5 million a month initially. Should it go down? I hope so. If we do a better job on our end, on this side of the company, and how we look at the systems that we have. So that gave us the idea, like I said, of we need to move to the future, and the future is as an outside source system versus in-house. I mean, we've been adept at building our own systems here for many, many years. I've built so many over here for that side, but it's gotten to the point where there's too many, and we need to consolidate these into one core system.
Yeah, it sounds like you're looking for a sustainable solution, not just an immediate solution. And that's very important for sure, especially considering, and we'll get through this here in the next slide actually, so I'll move forward, but the contract piece that you were talking about, right? So if your contracts are ever going to change, because right now they are so fluid and the way that you manage the style is so fluid that it's going to change. So dynamically created contracts, which just means that they're different every time they come in, products being delivered and those fulfillment events, services, components, so various streams with timing, carves, allocations, and standalone selling prices. So you mentioned maintaining those standalone selling prices and all those allocations that were still there in 605, but have a little bit more complexity now because of those carves and standalone selling prices in 606, and then contract modification. So if you increase or decrease your services, you know, that's a lot of changes. So that pre-processing, that post-processing, all those different fluid movements in the contracts. And then again, those systems considerations. So what's happening upstream from a billing and fulfillment system, and then how is it handling it? So is it a rules-based policy versus some sort of dynamic sort of change in the functionality, and whether or not your systems can handle that. And then I guess the ultimate question is sort of how does this affect your business, right? So what are the business implications? Excuse me, I can't use that word today. So here I've kind of outlined multipliers. So companies, you know, you acquired Yellow Pages. The more companies you add, the more reporting entities that you add, it's just multiplying onto those different revenue streams. Materiality, so you have to consider, you know, what's actually getting, you know, what is the best approach for every contract, and then communication between accounting and business departments. This is actually one of my favorite multipliers, right? Because if you have to multiply all the communication between the accounting and business departments, and it wasn't previously there. So the sales teams now have to talk to the accountants, and they have to talk to the IT people if they weren't already doing so. And the same goes for the system considerations. So the communication between the accounting and business systems, just like you were talking about earlier. If you have 20 to 30 upstream systems, because you have that many companies, again, it comes down to, are they talking to one another, and can they talk to one another? It just makes it easier for you. And then security and controls, which is a big piece of it. Automation and controls, we talked a little bit about that in our last webinar as well. But from a volume perspective, security is huge, and those controls in place to track everything. And we will talk about that some more towards the end, because I know that's one of your biggest focuses, but security and controls is huge. Okay, so do you have anything additional to add before we jump to our next polling question, Tim?
No, I don't think so.
Okay. All right, guys, so let's go ahead and jump to our second polling question. Again, you'll probably have 30, maybe 40 seconds to answer the question. Make sure you submit your answer so I can give you CPE credit if you need it. All right, so how is your company planning to meet compliance with ASC 606? Excel spreadsheet, an ERP system, a modular solution, or build an in-house solution, maybe something else? Again, we talked about the in-house built application that Tim was using before that he helped build. We've talked about the modular solution. We've talked about ERP. We haven't talked a lot about Excel spreadsheets. It looks like from the answers you guys are using those, and I'll close the poll here in a second and share. But I actually wrote a blog post on how to avoid Excel spreadsheets, which I will share with you all at the end. Okay, so I'm going to close the poll and we can talk about this. All right, so we have 53% in Excel spreadsheet and 53%. I don't know how that adds up to 100. Oh, we allowed you to select more, that's why. And it looks like none of you really are using a built solution or a modular solution, which, we've kind of talked through. Maybe you'll reconsider the fact that ERP systems are not one size fits all. And perhaps the same people that answered ERP are answering Excel spreadsheet because they need those spreadsheets to supplement the gaps in their ERP system, just like Tim mentioned earlier. Like maybe they're good for something, but they don't fulfill the entire need. Tim, do you have any comments on these results?
Well, we looked at the ERP systems as well. The problem that we had was the complexity of all the systems that we had. They didn't have a 606 revenue recognition package that would fulfill our needs, and that comes back to the customization idea. Where do we want to spend a year having them build one for us, or go with a system that already exists? And we chose the latter. We chose to say, well, we'll go with SOFTRAX because the idea of building a new one just seems a lot more difficult in the short term. But then we get into the issue when an ERP system such as PeopleSoft or Oracle Financials upgrades, as some people out there may know, when it comes to an upgrade through one of their packages, unless it's cloud-based, that you may have to go through different types of iterations associated with every piece that you customize, as far as integrating a new version and the testing that's involved. We've run across that on our ERP systems over here, because we're not on a cloud-based. Now, we have heard on future cloud-based systems that if you do go through an upgrade, it should be minimal. And so that's one of the SOFTRAX parts that we liked was, because it's cloud-based versus our ERP system, if an upgrade occurs, it shouldn't impact us anywhere near as much as it does when we have an in-house package. Now, when it comes to Excel, for that portion, if you have, I do some application development in Excel and Access and things of that nature, and from my perspective, if you have a certain volume, nothing like ours, from what I've seen, so the formulas and how to lock down an application and turn it into a true application versus just a workbook, it can work quite well, actually. The problem that I've seen is when it comes to large volumes. And then it starts having some issues. We've got that 1.6 million record count or something else. How much database connectivity do I have going on behind the scenes of the code? It can work quite well. and I use it here for some applications to do similar kind of things, not necessarily a 606, but for accounting purposes, it's a nice tool. Accountants are quite used to it. And so I'm changing my side a little bit more to meet something that they're comfortable with. So I don't discount using an Excel ID at all.
Yeah, that's fair. I mean, as an accountant, I also love Excel, so I appreciate how to use it and use it properly. But yes, in terms of volume, it just kind of shuts down on you at some point, and you kind of get locked into it. And then, from an audit perspective, how difficult would it be to audit some of those spreadsheets that you bring in?
It can be. It depends on your methodology for how you engineer it. I like to start, when I'm doing something of that nature, I'll put in my data set, and I'll treat it like a system Excel, and I'll put in my data set one tab, and then I'll flow through it, and I may have other tabs that would be like a table structure in a system for reference data that I may need to integrate, and then I will slowly move through that line. That working with the auditors on that concept, it can work okay from what I've seen.
Okay. Well, then it's a good thing that you consider it. It sounds like you're kind of using all of the above.
Yes, I am.
Yeah, gotta do what you gotta
do. Every piece of this I use somewhere. Everything has a pro and a con.
Yeah. Yes, that's true. Okay, so moving on to our next topic, we'll then talk about sort of the transition to purpose-built automation. So from homegrown automation to a modular agnostic subledger. So kind of going back to how you guys started in a homegrown automation or application and then moved to Revenue Manager. So just a high level, what are companies looking for now in a modular agnostic subledger? They're looking for a purpose-built solution that is flexible. So we've been talking about flexibility and a system that's agile and sustainable for today's technology and for today's business practices. And then of course it has to have support for ASC 606 and IFRS 15, as well as maybe even the new leasing standard. And then it has to be able to configure to support the changing business model. So we talked about contract fluidity, those mergers and acquisitions and future changes to ASC 606. Maybe those high volume, things like that. And then data availability. So, I mean, I'm big into data availability. Again, this is automation and controls webinar, right? So the focus is on how much data do you have, where is it available, how is it available, being able to report on it, analyze it, really manipulating that data. And then is it scalable for the future? Is this something that you can build with and grow with? Rather than have it hold you back. So let's talk about then the customer experience with Revenue Manager. So DexYP's solution for automation was Revenue Manager. And I'm just going to go through sort of, Revenue Manager as a subledger. So this picture here, as you can see, there's at the bottom, SOFTRAX Revenue Manager. That is the system, the subledger system. Now, in the upstream, you can see CRM, order system, fulfillment, billing, and GL. Those could all be one platform, or they could be multiple. Tim's using 20 or 30. So it could be 20 or 30, or it could be one. It could be one ERP system. That depends on your business model and what's best for you. Now, once you define, we also listed out the steps here, the 5-step model. So you start upstream and you define that contract and the revenue items. And the cost items will come into Revenue Manager. We will identify those performance obligations. We'll determine that total contract value, assign those SSPs if there's allocation. We'll assign the general ledger account strings. We'll assign them revenue schedules. We'll do all of that configuration based on policies set up within Revenue Manager. And then we'll allocate the revenue based on those policies and recognize the revenue over the time necessary. Then the last step is processing the revenue and generating those journal entries and pushing them back up to the GL. Now you can see a couple of other blue bubbles in between the upstream systems and the subledger. So signals to recognize revenue and the billing signals there. Though that's because, while this is happening, maybe you have fulfillment events coming through. So if you're, recognizing revenue based on delivery of an item or based on some additional condition, you're waiting for a fulfillment event. Those are going to come in after your contract's already been submitted, after the order has been submitted. So Revenue Manager needs to be able to talk to that system and say, okay, this happened on this date. Now you can move forward with recognition. Same goes for billing. Billing doesn't always happen up front. Sometimes it happens in the middle. Sometimes it happens based on milestones. Sometimes it happens at the end. So we need to be able to handle the change from unbilled revenue to billed revenue and handle those contract assets and liabilities. So we can also handle the incoming billing signals as well, those invoices, and matching them up with the revenue items. Now, you can't see it in this picture, but we also have workflow. So if you have additional, data transformation necessities, we can build in workflow applications. And then even moving forward, we can talk about, robotics processing automation. We want this to be a really flexible solution. And we have some other solutions upstream as well. But this is Revenue Manager as a subledger. Okay, so let's talk about Revenue Manager in consideration for Dex. So we talked about high volume, we talked about their complicated scenarios. Tim did a great job of walking you through how much is going on behind the scenes, which is those dynamic contracts, those allocation pieces, maintaining those SSPs, all the upstream system integrations and having to talk to one another, and those contract modifications. So if you consider, 500,000 plus customers, as well as all these various processes and reprocesses, these are all just multipliers again and complexities for the system to handle. So let's talk about then the key business drivers and the challenges for the purchase of Revenue Manager. So again, we're just going to kind of summarize and explain, why DexYP chose Revenue Manager. So we labeled 3 business drivers: scalability, compliance, and then ASC 606 additional considerations. So we separated compliance and considerations a little bit there. Scalability is kind of obvious, the huge amount of transactions going through the system and then being able to grow. So, those mergers and acquisitions and all the data coming in. Compliance, we'll actually talk about this on the next slide, so I'm not going to go into too much detail, but external auditors. So we're considering this the controls piece of this. Talk about automation, talk about controls, auditability of these revenue streams based on customer levels versus, additional levels of revenue streams, maybe those companies and those reporting entities. And then granular versus summarized data reports for auditors. So again, what Tim was mentioning versus on the data availability piece, and using the tool for those higher levels, and extracting data, journal entries by customers for detailed tie-outs, that kind of thing. So how can you pull information out of the system as well as allow it to do its thing? And then ASC 606 considerations, again, we've been through these quite a number of times. Contract obligations, there's performance obligations, bundling, carving. These are all processes configured within Revenue Manager that were requirements of DexYP. Okay, so solutioning with Revenue Manager. Scalability is taken care of because those high volumes are handled timely and accurately. We've removed a lot of the manual processes involved in just running the transactions through the system, because obviously Tim's not going to look at 7.5 million transactions every day. So he's allowing Revenue Manager to do that. Compliance, it is that cloud offering with the SOC compliance and the audit trail, and then those ASC 606 considerations. The configuration engine behind ASC 606 we didn't really get into, but if you have questions about how we handle those policies and how we handle that dynamic functionality, I would love to walk you through it. I would love to have someone walk you through, the configurations. But I really want to focus on this last statement, which is that ultimately the goal was to reduce audit costs for a more sustainable and efficient system. So, Tim, can you kind of walk us through what this means to you guys and what your guys' goal was here?
Yeah. For the accounting firms that are out there, we use E&Y, but they have a package called Helix. And like any company with technology, they're trying to evolve as well. And they're trying to find a faster way to perform an audit. And so they have developed a system called Helix over there to it, in essence, loads up your transactions that you have as a company, and then it can analyze them. I spent some time working with them from the data that we have to try and find a way to take advantage of this package that they're developing. And I've heard that some of the other accounting firms out there are using similar type of packages, and they're developing these new systems for auditing. And so what I wanted to look at was to say, how can we take our company here and find a way to integrate into your audit system that they have through data transfer. And again, it's nothing, rocket sciencey, I guess, but we found I found a methodology through their package, so we can take transactions like Revenue Manager has, but also included things of cash, write-off, sales allowance, all these other different types of transactions, and get it down to not a customer level, a middle ground, if you will, and take advantage of their package, so we can cut down the sampling, and through it, we got a lot of savings, a lot of man hours of savings. And this is a part of SOFTRAX and their package that I found that I think we can take advantage of as well. And so what these new audit systems are looking at is to say, if you give me all your transactions, I should be able to see what is the standard process. And these packages can look at that and say, oh, well, you are doing this normally. So they're going to start looking for the outliers. What is not lining up? And so they can refine their sampling tests. Instead of looking at everything on a random basis, they could delve a little bit closer to maybe possible issues. And so there's some excitement around that, because when we talk about something of a company of our size, well, instead of 1,200 customers, maybe you only have to look at 100 now. Well, when you think about when I audit a customer, I have to look at contracts, payments, write-offs, cash, revenues, billings. That right there saves a lot of man hours, which then translates also into some audit fees as well. And so something like the SOFTRAX and some other things that I'm developing over here, it takes advantage of this new idea of where accounting is going for these audit firms. And so for us, it's a huge savings that accountants don't get to save a whole lot sometimes, but to come back to management and say, hey, I think we could save you some money, that's a nice feature for an accountant.
That's what we should start telling people. That's how we should sell it. We can save you some money in the long run, audit fees. But that's a great point. It is kind of nice to be able to go back to your boss and be like, look what I did. And I'm glad that we can help you out there with some of those man hours. So if you're no longer spending so much time on these audits, and I mean, you'll be able to focus on other things, right? So now you can kind of move your attention towards, analytics or reporting, or, what the future holds.
Correct. I mean, when we think about it, for all the different departments, instead of doing audit work, they are there to grow the business. They are there to make things more efficient in other areas. It just frees up time to do other things.
Right.
I look at the accountant side and say, sitting here going through the audit, while that's important, their time could be better served for other things.
Oh yeah. We will actually talk about that in our next section, but before we jump too quick, I want to make sure we get our polling questions in. So I'm going to launch our third polling question, guys. Please make sure you answer the question again if you need CPE credit. So the question is, which ASC 606 disclosure requirement is most complex or challenging for your company? Disaggregation of revenue, presentation of contract balances, the transaction price, determining the timing of satisfaction for performance obligations, or none or other. And again, this is going to depend on your business model, but we are curious to find out. I'll give you 10 or 15 more seconds, and then we'll collect those responses, and we will share them with the group. All right, I'm going to close the poll and share those results with you all. Looks like we have about 31% the transaction price allocated to the remaining performance obligations. So disaggregation of revenue and allocation are big ones. So processing as well as the reporting and analytics side of it. I think those are both really important. Okay, so let's move on then to our last and final topic and our last polling question eventually here, the future. So it was a great segue. Tim just jumped us into, we can focus on reporting, we can focus on other things in the business and how we can save more money down the line. So what does the future of revenue recognition hold? We've talked about the technology as a whole, and we've talked about systems and talking about being adaptive. So now let's focus then on these pieces here: reporting and analytics, flexibility for growth, and automation and controls. Again, just really hitting home these three things that you can now focus on if you have an automated system in place. So we're taking away from those data-driven processes and towards analytics for decision making. And Revenue Manager supports these through the BI tools and the integrated reporting solution, as well as some multi-currency features and reconciliation reports that are available for, especially for large growth companies, right? They need those tools in place, and they need those out-of-the-box functions, as well as those, custom reports and ability to do what they want to do that's specific to their business model, and then be able to have it segmented based on the business model, as well as flexibility for growth and configuration. So coming back to that scalability piece, you have to have the configurations engine that supports a quick implementation or re-implementation, I suppose, based on that evolution. So if you have new policies, and then in the addition of workflow. So if workflow comes into play, we can fill in those gaps for any business transformation pieces. And then again, we talked about audit controls and support for the evolution of the business. One more slide here in terms of some of the complexities that are being handled by these automatic solutions: growth, industry standards, mergers and acquisitions, analytics and data and availability, and that data transformation piece. Tim, is there anything you would like to add on the future of revenue recognition as a whole?
I would say, this new world of accountancy that they've come up with for the 606, it's a transformation of an accountant's role. I mean, we would usually compile data and we would get information from different systems and report on the activities. In this new world, I think there's a change where accountants will be also at the front to say, well, what does your contract look like? What new products are you coming up with? Can I help with, margin analysis? How do we treat our customers? Other types of things, from even a simple sales allowance idea. I think the idea of accountancy at the tail end is shifting to where it's becoming more on the front end. I think it's an exciting thing for everyone.
Yeah, I think that's a great point. Really transitioning the accountant's role as a whole. Okay, so then let's launch our last and final polling question before we wrap it up here. So what are the major business implications of implementing ASC 606 for your company? We really want to better understand, companies believe that automation and controls is going to be the future. So is it volumes of revenue transactions, complicated revenue treatment, separation of order to cash and order to revenue, those non-standard business practices, audit and controls, or reporting and disclosures? I'll give you some time to answer that. I would think based on our discussion today that, all of these are major business implications, but, we're curious to see which one is most important for you guys right now, especially since most of you have already implemented. All right, a couple more seconds and then I'll close the poll and share those results. All right, 45% of you are dealing with complicated revenue treatments. That is the major business implication. And then the next one is volume. Okay, so complicated revenue treatments is the major business implication of implementing ASC 606 for your company. All right. Tim, do you have any thoughts on this polling result?
I could understand the complicated revenue treatments. This whole idea of shifting to what does the street want to say versus what accountants do. It's a major shift. The math in some of these areas is extremely complex. And I personally have not been a fan of some of the math puzzles I've been working on. While they're exciting, I question whether it's useful or not, because the level of complexity that's been added just for people on the street. At least that's how I feel.
Yeah. Well, and especially if you have so many moving parts and so many different businesses that you're dealing with so much.
Yeah, yeah. The volume part, I get if a number of people are using Excel based off of the new models that 606 is creating. I do have a fear that as your volume increases, as you grow, and maybe even change within your company, Excel can be a problem. I could see that happening. There are some struggles involved. I've noticed it on some of the applications I've developed for revenue using Excel. Uh, they may hold up in millions of transactions, but those millions of transactions need to be like-minded. Once ideas start changing, it can bog down a little bit. I think I could see why that could be an issue.
Yeah, I'm imagining sort of, the carve process or the contract modification process within some sort of Excel or a basic solution, and that becomes very difficult to manage. A lot of manual touches there and adjustments.
Yeah, the idea of this retrospective versus prospective accounting,
Right.
from an engineering standpoint, how I look at things, um, the idea of keeping track of your transactions and what is the remainder balance in case you have to switch through a contract modification to some prospective treatment, and handling all of this history, if you will, or balances associated with it. I mean, I've thought about it to say that if I'm looking at a contract now, I need to care for a balance associated with it for the remainder, the deferred portion, in case I have to go to a prospective version and do that cutoff termination and create a new one. And so if I'm using something like Excel, I think I could see some complications around that. Access I know can handle it just fine for certain sizes and stuff, because I've built a number of applications on that side. But that whole prospective portion, I think that could be a real concern.
Yeah. Well, and I can also see how, your expertise is in systems and applications, and then you also know the accounting behind it. And I think a lot of the accounting teams may be struggling with understanding the systems and, being able to get all of that together. Not everyone has the expertise that you that you have, so that may be a little more difficult.
And I wouldn't expect everyone on this call to have all the technical expertise, simply because I like learning, and I've given up a very large chunk of my time or life outside of work just to keep studying. And on the IT side, it's just like accounting on both sides. You could be studying the rest of your life, learning more and more and more.
Oh yeah.
And so at times it becomes, how far do you want to get and become good at one versus the other? And IT, it can be real difficult. I mean, to learn all of these little portions. Not everyone likes doing that. There's a reason why you became an accountant versus become a programmer.
That's true.
And keep that in mind. Just like a programmer did not become an accountant. So if you're working with IT, they don't always necessarily understand your terminology or the way the business thinks. But that's why they didn't become an accountant either.
Yeah, and that's where the communication piece comes into play. It's a really big deal. You have to be able to talk to one another. Systems do, departments do, It's all about communication these days, for sure.
Yeah, that's the new paradigm shift that's going on with this 606.
Yeah. Well, we are unfortunately out of time. It is 2 p.m. There are some additional resources up on the screen if anybody would like to visit our website. There's also a blog on revenue recognition. There's a roundup that goes out every few weeks that is really helpful, as well as some more blog posts, one about Excel, and other webinars on the website. So also this will be posted online as soon as possible. If anybody wants to share this with their friends or share this with their colleagues, you'll be able to watch this on demand pretty quickly. And feel free to contact us for any questions. CPE credits, again, will be sent out as soon as possible as well. We will get those together. Tim, thank you so much for your time today. It was wonderful to hear about Dex and some of the things that you had to bring to the table. I really appreciate your time.
Oh, you're welcome, Kristen.
Anytime. All right. So thank you all for joining us. Thank you for attending the webinar. Again, if you have any questions, please feel free to reach out at any time.